Well, hello everybody, welcome back to another Forex market analysis session. My name is Alexander Nikitin, I am a professional trader and a programmer as well. And today we are going to talk a little bit about higher high and higher close principles, why it is so important. And I will show you some bearish opportunity on Euro Yen. Well, as usual, I start my analysis from a daily time frame and then I switch to my trading time frames to find some reasons for entry. On my high time frame, I am to identify what price is doing now and to predict what price is most likely to do next. So this means that I am to read what the price is doing right now. I am to understand the behavior of the market. And here the candle close principles helps me a lot. I have created this indicator that shows me every candle that has a higher close above the previous high or the lower close below the previous low. So, and I created a special swing identification algorithm based on this. It says that a valid swing should contain at least two candles being opposite to the direction of the previous swing. For example, we had a swing to the upside, so a valid swing to the downside should at least have two red candles, or it should be three candles if we don't have two red candles in a row. So this is the minimum requirement, and one of these candles should have lower low, lower close. So it is inverse to the to a downtrend rules. Very simple. At least three candles if they are mixed, and two candles if they are the same color and opposite. Okay, let us draw the swings. We have two candles. Total we have three, and two of them have lower low, lower closes. So this indicates a valid pullback. After that we have a continuation. Again we have 1, 2, 3 candles. This indicates a valid pullback. So why is this very important that a pullback should have that lower low, lower close? Because it usually acts as support and resistance level in future. So that's why it is very important. So many of you guys would draw it this way, something like this, but I wouldn't. I would draw it this way, from here to here. Then we had a pause, a stop, and then we had a continuation. Okay, do we have a pullback here? No, we don't have it because we have only one candle. Do we have a pullback here? Yes, we have a pullback here. But then we have a movement to the upside, and then we don't have a movement to the downside, so we have it to the upside as well. If we start from here to the upside and then we just unite those two lows, taking the one that is lower. So this would be the whole picture, skipping those swings that aren't valid according to my rules. If we draw it this way, you will see that ascending triangle that was broken to the downside. Okay, we have a swing to the downside, valid swing to my rules, and we have a swing to the upside. This is invalid for me, because if I unite that to the downside, I have a candle close to the downside, but I have only two candles and they are mixed. If only this candle was red, then it would be a nice pullback to the downside. Okay, so we have a lower low, lower close, then we have a pullback this way, then we have a lower low, lower close, and now we have a pullback as well. So after we have a pullback, the prediction is that we will most likely have a lower low, lower close to the downside, because we have a tendency, we have a series of lower lows and they are more likely to continue than to reverse. If price should reverse, it should first install a higher close, showing us a bearish rotation. Oh, sorry, bullish rotation. But in this case, we don't have it. We only have a deep pullback that gives us nice risk to reward. Until it violates the previous high, it will still be a lower low, and a series of lower lows lower high, and a series of lower lows followed by lower highs is still a downtrend. So we have it this way. How can we attack that situation? Well, we have to I am to open those trading time frames and find some reasons for entry. Let me go to my 4-hour time frame. No, I don't have it. And let me go to my 1-hour time frame. Here I have a potential pattern formation, which is in line with that analysis of daily time frame. If I draw the XA, AB and BC legs this way, run my pattern search, it will draw the Gartley formation that we have here. You have comment the Gartley is valid and stop is 17.6. This means that you are going to risk 17 pips. The distance is 17.5 pips, 17.7, 17.6. So the Gartley formation around 120.80s with targets around 120.63 and 120.52. Well, that's it about the formation. That's it about those lower low, lower close principles in swing identification. Hope you like that. If so, give me your thumbs up, share this video on social media. Until then, good luck, good trading, hope to see you soon.